Somewhere underground right now, a single tunnel may hold more wealth than an entire city block. Stay with me for a few minutes, and you may never look at a gold ring or a gold coin the same way again. By the end of this video, you'll understand how gold mines actually work, why they can create massive wealth, and why they may also be one of the riskiest businesses a person can own. Let's start with something simple. Gold doesn't just appear in stores. Before it becomes a ring, a coin, or a bar, it usually starts underground, hidden inside rock, sometimes thousands of feet below the surface. Getting it out isn't easy, and that's exactly why gold can be so valuable. Think of it like searching for a single puzzle piece hidden inside a mountain of sand. You may need to dig through tons of rock and dirt just to find a small amount of actual gold. This difficulty is part of why gold mining can be both incredibly profitable and incredibly risky at the same time. Finding gold is only the first challenge. Before anyone can even think about digging a mine, they usually need to find a spot where gold is likely to be. This process is called exploration, and it can take years, sometimes even a decade, before a company knows for sure if a location has enough gold to be worth mining. Companies may spend millions of dollars just testing the ground, drilling small holes, and studying rock samples. And here's the tricky part: even after all that testing, there's no guarantee. A spot that looked promising might turn out to have very little gold, and all that money spent on searching may simply be lost. Here's a small example. Imagine spending months looking for a rare seashell on a huge beach, based only on a small hint that it might be there. You could spend a lot of time and effort, and still walk away with nothing. Gold exploration can feel a bit like that, just on a much bigger and more expensive scale. Have you ever wondered how people even know where to start digging for gold in the first place? Let me know your guess in the comments. Digging the mine is a massive financial bet. Once a company is fairly confident that gold exists in a certain area, the next step is building the actual mine. This part alone can cost hundreds of millions of dollars. They may need to dig deep tunnels, build supporting structures, bring in heavy machinery, and hire hundreds of workers. This is where the real risk shows up. All this money is usually spent before a single piece of gold is sold. If something goes wrong, like the tunnel collapsing, or the gold running out faster than expected, the company could lose a huge amount of money, with very little to show for it. It's a bit like building an entire factory before knowing for sure how many products you'll actually be able to sell. That's the level of risk involved in opening an underground gold mine. Gold prices can rise and fall without warning, even if a mine is successful and gold is being pulled out of the ground. There's another challenge waiting. The price of gold can change often, sometimes within just a few days. Gold prices may go up when people feel uncertain about the economy, since many people see gold as a safe place to keep their money. But prices can also drop if the economy feels more stable, or if people feel comfortable investing their money in other things instead. This means a mining company might spend a huge amount of money digging out gold, only to find that the price has dropped by the time they're ready to sell it. This uncertainty is part of what makes gold mining such an unpredictable business, even for people who do everything right. Quick question: did you know gold prices can change almost every single day, just like stock prices? Let me know if that surprises you. Safety and environment add extra costs. Digging deep underground isn't just physically difficult, it can also be dangerous. Mines may need strong safety systems to protect workers from things like collapsing tunnels, poor air quality, or extreme heat underground. On top of that, many countries now require mining companies to follow strict environmental rules. This might include restoring the land after mining is done, or making sure nearby water sources aren't polluted. These rules are important for protecting people and nature, but they can also add a significant cost to running a mine. So, even after finding gold and successfully digging it out, a company still has to spend money keeping workers safe and following environmental guidelines. These are costs that many people never think about when they picture a gold mine. When it works, the rewards can be massive. With all this risk, you might wonder why anyone would still want to own a gold mine. The answer is simple. When a mine is successful, it can create enormous wealth, sometimes for decades. Once a mine is built and running smoothly, the ongoing cost of digging out more gold can be much lower compared to the huge amount spent in the beginning. This means that after the mine starts making a profit, that profit could continue for many years, especially if gold prices stay strong. Think of it like planting a tree that takes years to grow, but once it does, it may keep producing fruit for a very long time. The early years might feel slow and expensive, but the later years could bring steady rewards. Owning gold in the ground is different from owning gold in hand. Here's something interesting most people don't consider. Owning shares in a gold mine isn't the same as owning a gold necklace or coin. When you own part of a mining company, you're not just betting on the price of gold. You're also betting on the company's ability to dig it out safely, legally, and efficiently. This means two people could both be interested in gold, but one might buy a gold coin, while the other invests in a mining company. Their risks can be very different. The coin owner mainly depends on the gold price. The mining investor depends on the price, the mine's success, and how well the company is managed. Have you ever thought about the difference between owning actual gold versus owning part of a gold mining company? Share your thoughts in the comments. The long game, patience over quick wins. Here's the bigger lesson from all of this. Gold mining isn't usually a fast way to get rich. It's often a long, patient process that can take years before it becomes profitable, if it becomes profitable at all. Many successful mining companies didn't get lucky overnight. They spent years exploring, testing, building, and adjusting their plans along the way. The ones that succeed often share one thing in common: they were willing to accept years of risk and uncertainty, in hopes of a much bigger reward later on. This is why gold mining is sometimes described as one of the ultimate high-risk, high-reward businesses. It may demand huge amounts of money, patience, and courage, but for those who succeed, the payoff could be worth the long wait. So, let's bring it all together simply. Owning a gold mine isn't just about digging up something shiny and valuable. It may involve years of searching, massive upfront costs, unpredictable prices, and serious safety responsibilities. But for those who manage to succeed, it can also lead to long-term wealth that few other businesses can match. Understanding this doesn't mean gold mining is only for the wealthy or the reckless. It simply means that behind every gold ring or gold bar, there may be a much bigger, riskier story than most people ever imagine. If this video helped you understand something new about how wealth can be built underground, you might enjoy our next video too, where we explore another hidden industry that quietly shapes the world's economy. The ongoing cost of digging out more gold can be much lower compared to the huge amount spent in the beginning. And if you'd like more simple breakdowns like this one, consider subscribing. Thanks for watching, and I'll see you in the next video.